Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Crypto is in trouble again, and that's because Coinbase was sued by the S.E.C, the Securities and Exchange Commission. This is because the S.E.C alleges that they were not following the correct rules for being a brokerage. They've been operating this whole time in a lawless environment, according to the New York Times and other media outlets. So let's quickly break down what is going on here. Should you invest in Coinbase? Spoiler alert, no. What is going on, and what does this mean for the stock market and perhaps for the crypto market as well? So again, Coinbase, they operate basically as an investing company. They are the Fidelity, but basically for crypto, at least the way that I interpret it. The S.E.C says, hey, look, y'all have not been operating by the exact same rules as Fidelity, Charles Schwab, TD Ameritrade, all that type of stuff, and we see y'all in the same light. Coinbase, and I kind of agree with them here, say, look, we went public in 2021. I gave you all the documents when we went public, and y'all said it was fine. You can't now come back 2 years later and say, oh, everything you've done is illegal now. I kind of agree with them. Now, I have my own beast with Coinbase and crypto and all that kind of stuff, but the S.E.C did approve of them going public, which basically says everything you're doing is above board and fine anyway. So we'll see where that lawsuit goes. But in addition to that lawsuit, they are being sued by 10 additional states, including Alabama, New Jersey, California, and obviously 7 more. And things can get a bit costly. Now, from what I read today, and this is primarily from Fox Business and from the New York Times, this fine could run up to $5 million, which really isn't that much for Coinbase. What it does mean, though, is it puts crypto in a negative light, and this is going to shake up the market. We already know that Coinbase was down another 10% today, and that is on top of the 78% the stock has dropped since 2021. To give you a little bit of context here, I think it was around November or December of 2021, Coinbase was above $350 a share. When it went public at $300 a share. Today, it is less than $60 per share. It has been a wild ride down for the majority of Coinbase's public life as a stock. But what does this mean for the crypto world in general? There is a good side of this and a bad side of this. The good side is if this goes through all the way through court and a judge rules and really defines what crypto is and what it means, and we have true regulation on this entire space, then it could help Coinbase become more legitimate. It could help put more structure around crypto where you don't run into, at least you hope, that you don't run into more FTXs and Binances and all these crypto companies that went belly up and really didn't have that much of that many consequences. So that's the good side of this. The bad side is, in the meantime, Coinbase could suffer. We will see what happens with other cryptocurrencies, Bitcoin, Ethereum, and all the other millions of crypto coins out there, and what happens in that space. As an investor, here's what I want you to know right now. Number one, at this current time, I do not think investing in crypto companies, I want to be very clear, crypto companies like Coinbase is a very wise decision. We have seen this because Coinbase has been losing tons of money since 2021, and things have only gotten worse. Hopping into the stock right now, we don't know what the outcome of this regulation is going to be, or the outcome of this case rather is going to be. Doesn't make a whole bunch of sense to jump into this space. The other thing too is I want you to think like a business owner and really somebody who's looking at business strategy. Let's say that this entire thing plays out in court and they come out of it and say, hey, look, we have clean crypto regulations. Here's how we're going to move it forward. And we're going to treat crypto just like we treat stocks. Right now, believe it or not, they're not treated in that way. We can talk a little bit about that in a few minutes. But that's the case. And they say, Coinbase, here are your rules. You go out there and run your business. What's the problem with that? What do you think? Real quick, what is the problem once regulation comes out and they say that Coinbase can run their operations like normal? The problem is, once that is out there, and let's, in this mythical example, that hypothetical example rather, that we have all these regulations and things are fine with crypto, that doesn't just mean that Coinbase is fine. It also opens the door for its other competitors. There's a reason why Fidelity and Charles Schwab, and TD, I think was bought by Charles Schwab, but y'all get the point here. All these legacy brokerage that only did just the stock market, they're now going to be able to enter the game, and they're already going to be decades ahead of where Coinbase is. All they have to do is just enable the crypto arm of this, but they already have the accounts, they already have the money, and they already have the people. So it's going to make things a lot more difficult for Coinbase. I see this very similarly, and I feel like I link everything to Netflix, but I'm really not trying to, but very similar to Netflix in that Netflix was the first one out there, primarily for streaming, for the whole subscription model, and then Disney, who already had the content, was up and running very quickly, right? We saw how many people download Disney Plus because boom, they already had the content, they already had that stuff behind it. What happens when Fidelity launches its full out crypto app, whatever the app may be? Again, hypothetical example, should all of this stuff be ironed out? The thing is, we don't know how long it's going to take. It could be years, it could be months. I'm not the legal expert here. I'm definitely not the political Capitol Hill expert to tell you when bills are going to get passed and how things are going to be introduced. But that is the risk, which is both good and bad. Coinbase opens up their business. They absolve themselves, you would think, of the majority of lawsuits, even though they got 10 other ones out there. But then you also open yourself up to a ton of competition, established competition, because think of it like this. Remember, a lot of these legacy players, like a Fidelity, already have money. And when I say money, I'm talking about like my 401k from, I would say 2 of the 5 jobs I've had Fidelity 401ks built into them. Meaning that I was putting in my 15%, and before you knew it, it was tens of thousands of dollars. Meaning I'm not gonna leave that money. I'm stuck, right? I would prefer to stay where all that money is. I want to go where the money resides, right? So I'm going to open more accounts there. I'm going to have my brokerage accounts there, and if they happen to open a crypto app, I already got my money there. I'm going to stay there. I'm not going to move and go to Coinbase or SoFi or anywhere else. It is rare for people to do that, and that's going to be an issue from a business perspective. So for me, based on what we have right now, and notice things can change in the future, but right now, I don't think it's a good investment. I don't think it's a great company. They've been losing money, and we've been on record for saying that for quite some time. And don't forget that the majority of their money was made on transaction fees, which, I don't know about you, I don't like paying fees. And we are in an environment, especially for the stock market, where we're not used to paying fees. We may donate if we feel like it, but I like buying and selling my ETFs and my stocks for free. And Coinbase does not operate like that. Again, if you were to do this for Fidelity, where everything else is free, and Fidelity steps into that space, what other ways is Coinbase going to make money? And how are they going to flip that switch? There are other ways. Robinhood is trying a subscription model for some things and trying to open up savings accounts and stuff like that. Maybe they move into that space. But now you got to compete against Robinhood. Right now you're fighting against Robinhood, now you're fighting against Fidelities and everybody else, and it's not going to be easy for them to carve out a space and be the company that most people expected them to be way back in 2021. So that's my concern about the company. For crypto itself, and I've mentioned this a few times, I still think 5% of your overall assets can be in crypto. If you believe more in Bitcoin than Ethereum, believe more in Ethereum than Ripple or Polygon or whatever else is out there, that's totally up to you. What I will say though, and I've said this many times before, we need to reevaluate what crypto really is, what it means, and how it should behave in certain markets. Because as investors, the entire exercise of investing is putting your money into companies or into assets that will perform in certain ways that we expect or we think is relatively predictable. Okay, I expect that Walmart is going to be here, right? They're going to sell goods, so I'm going to invest in that area. I expect people to hold on to their cars in a recession or in a normal market, therefore I'm investing in AutoZone. I'm investing in O'Reilly Auto Parts. I'm investing in Apple because somebody's going to buy that $3,500 headset. Another conversation for a different day. But you guys see where I'm going here. The original premise, and again, I said original twice, but y'all get the point. But the original premise of crypto at the time, and notice it's not even 20 years old yet, was that it's a hedge against inflation. It is basically digital gold. When inflation goes up, this is supposed to kind of offset that. That was not true. Okay, we had all these Bitcoin experts and crypto experts, blockchain experts, all these people coming out here telling you that by the end of 2021 or the end of 2022, no, that was 2021, that was going to be 100,000. Didn't do that, right? And now people are coming back and redefining what all this stuff is supposed to do and what it's supposed to mean. And I don't really think we've landed on that. And if you want to risk it because those assets are up right now, that's fine. But as I've talked about with the stock market or even real estate, you must have a way to evaluate that asset and say that it is worth X. So I'm going to pay this amount because I think it's worth more than what I'm paying for it. That is the entire purpose. And I don't think you can nail that down for NFTs at this point in time. I think we've learned that lesson, and we definitely can't do it for crypto because what are you really boiling this thing down to? At the end of the day, what is it? If nothing else, for a stock that pays dividends, I can say, look, it's going to pay me X amount in dividends for the next 50 years, right? Or I estimate that's going to do that for the next 50 years. Therefore, I add all this stuff up and it's worth $10, right? And it's trading at 2. So I'm going to go ahead and buy it at what I think is a discount. That makes sense. I can do the exact same thing for a property. Say I can rent it out for $1,500 a month for the next 15 years. It's going to generate this much cash. You know, calculate taxes and say this is how much this house is worth if I buy it right now because I'm going to make this much more money. That's how it works. You can't do that with crypto, and you certainly can't do it with a company like Coinbase based on the amount of money they're losing right now. So at this point in time, I'm gonna reiterate, it's a no for me, dog, right? For Coinbase. And the reason why I have to emphasize that is because 50% of people, at least on public, are still buying the company as of this week. That does not make sense. You don't really want to buy into something that's down 80% and still doesn't have any basis right now at the bottom. Like, what is happening that's gotten better that says, hey, look, we think this thing is over, things are going to trend in the right direction? I don't really see that. Okay, and that's going to be the issue for companies like Coinbase and anybody that is crypto adjacent. So be very careful about that space. Also remember, even though I don't see crypto trending in the way that it was a year and a half or even 2 years ago, you don't always have to invest in whatever the latest and greatest thing is. You can, but always remember, you want to kind of limit your risk to a degree. Even AI, right? That's the thing that's trending right now. I don't have all of my money in NVIDIA. I got a little bit, right? You want to have a little bit here, a little bit there, and if something goes wrong, you want to make sure that your portfolio is built in a way that protects you. You want to have the ability to be wrong and not tank your entire portfolio and set yourself back several years. You don't want to do that, okay? That is what you need to know about both Coinbase, this lawsuit, and what you need to know about crypto as a whole. If you want to learn more and how to become a better investor, then you know what to do. You can join our members only because we do exclusive deep dives into the stock market. We answer Q&As, question and answers, each week. You want to make sure you check us out. It's only $10 a month, and you get content every single week that is exclusive to those inside the group. All right, that is it for me. I will talk to y'all tomorrow. Bye.